statement of affairs and balance sheet. They both present the picture of assets and liabilities of a business. But there are basic fundamental differences between the two. Let us learn what are those differences. On the basis of reliability. Now students, statement of affairs is prepared from incomplete records. Hence it is less reliable. Obviously, it is in the case of incomplete records that we prepare statement of affairs, and incomplete records do not present complete picture. So the information is always less reliable in this case, whereas balance sheet is prepared in a double entry system. So the information is reliable in this case. Then coming to objective. The basic objective of statement of affairs is to calculate capital. This capital is then further used to calculate profit and loss. There is no other objective. Whereas in case of balance sheet, the basic objective is to present true and fair picture of the financial position of a business. To present true and fair picture of financial position. Then coming to omission. Since statement of affairs is prepared from incomplete records, it is almost impossible that you can detect any omission through the statement of affairs only. So it is difficult to gather information about any omissions. Whereas in case of balance sheet, if the balance sheet doesn't tally, it can be actually judged that some figure is missing, and this figure can be then located through accounts, and that information would be reliable as the accounts have been prepared on double entry system. So any omission can be located through a balance sheet.